Hello and welcome to China Shortcuts,
the European Chamber's weekly catch-up on China's business landscape.
This episode was recorded on 4th June 2025. On 2nd June, European Union member states voted to restrict Chinese medical device manufacturers' access to the EU's procurement market. The move constitutes the first use of the EU's International Procurement Instrument, or IPI. It follows an investigation launched last April, which concluded that foreign products only have minimal access to Chinese government procurement for healthcare equipment.
Chinese medical devices providers will now be blocked from bidding on relevant EU public procurement tenders with a value over €5 million for a period of 5 years. A lack of fair access to government procurement in China has been a long-standing issue for European companies operating in the country. It has been a key advocacy topic for the European Chamber's Healthcare Equipment Working Group since the launch of the China Manufacturing 2025 initiative in 2015, which included market share targets for domestic high-end medical devices. In the European Chamber's Business Confidence Survey 2025, 100% of respondents in the medical devices sector reported missing business opportunities in China in 2024 due to market access and regulatory barriers, with discrimination against foreign invested enterprises in public procurement the top regulatory obstacle faced. While caution should be exercised in the potential application of trade defense tools, the European Chamber supports the end goal of this action, which is to ensure that European companies have the same access to China's procurement market as Chinese companies enjoy in Europe.
Data released by the Statistics Bureau on 31st May showed that manufacturing activity in China continued to decline for the second month in a row in May, as demand continued to contract.
The official Manufacturing Purchasing Managers Index, or PMI, stood at 49.5 points. This was the second month that the reading stayed below 50 points, indicating a contraction. That said, the pace of decline slowed compared to April, with most sub-indices improving from the previous month. However, while an improvement in supply meant that production edged back up to expansion territory, demand still missed the mark, with both new export and import orders contracting in May. The official non-manufacturing PMI, which gauges services and construction activity, stood at 50.3 points, with the pace of expansion dropping for the third consecutive month in May. This was largely due to a sharp slowdown in construction activity growth due to weak demand.
Findings of a private survey released on 3rd June suggest that operating conditions in China's manufacturing sector deteriorated in May, with both output and new orders falling.
The Caixin China General Manufacturing PMI stood at 48.3 points in May, down from 50.4 points recorded in the previous month. This marked the first time in 8 months that the Caixin Headline Index fell below the 50-point benchmark, with the reading dropping to the lowest level since September 2022. A key factor behind the decline was a sharp fall in new orders, with export orders contracting for the second consecutive month. Despite this, expectations for the year ahead among surveyed manufacturers improved in May, with firms expressing hopes that the widening of export markets will contribute to an increase in sales. Commenting on the data, Wang Zhe, senior economist at Caixin Insight Group, warned that the downward pressure on the Chinese economy had significantly intensified at the start of the second quarter. He attributed this to the increased uncertainty in the external trade environment, combined with headwinds in the domestic economy.
Following the escalation of tariffs and trade measures between the United States and China in April, the European Chamber conducted an online flash survey between 17th and 27th April 2025 to understand how its members have been affected. Shortly after, on 12th May, the US and China announced their decision to reduce tariffs on each other's goods in a joint statement, with both sides cutting tariffs on each other's goods by 115 percentage points for a 90-day period.
While the Chamber was encouraged by the decision, uncertainty remains, partly because certain tariffs have only been suspended temporarily, and partly due to the erratic nature in which the tariffs were implemented in the first place. Therefore, while the survey results may no longer reflect the current picture that the initial round of tariff announcements had on Chamber members, they are still indicative of the influence that the US-China trade relationship has on overall business confidence. They also serve as an indicator of what a future deterioration in the US-China relationship might mean for foreign businesses operating in China, for example, if trade talks do not lead to an agreement following the 90-day tariff suspension.
The full report of the survey findings is now available to download for free from the Chamber's website. As the global digital transformation accelerates and the use of artificial intelligence proliferates, cross-border data transfers are becoming even more crucial for European companies operating in China. However, compliance challenges are increasing in complexity, as both China and the EU have introduced their own regulatory frameworks for cross-border data flows.
The regulatory disparities between the EU and China necessitate significant investments from European enterprises to harmonize their data management practices. This includes finding ways to comply with the requirements of both jurisdictions regarding AI data localization and cross-border data transfers.
Join us on 12th June online or in person in Beijing to hear legal experts from Europe share updates on key topics, including recent GDPR enforcement cases related to cross-border data transfers to China. In addition, drawing on real-life experience and industry best practices, specialists from leading consulting firms will offer practical insights into building effective cross-border data compliance strategies.
Thanks for listening, and don't forget to tune in again next week.
In the meantime, please find the useful links in the episode.